What's going on, everybody? It's your boy Danny the Bull here with Mr. Pags in the house. We got God's entry in the house. We're gonna talk markets. We're gonna talk Omi. We're gonna talk some Veve. We'll talk whatever. Maybe some aliens, World War III theories. Who knows where the conversation goes, right, guys?
Go for it.
Apocalyptic. Let's go.
So how you guys been, man? Good. I've never chatted with you, Pags. God's entry. You've been on the channel a few times, but this is FA Pags in the house.
Yeah, I do. I appreciate it. First and foremost, thanks. Thank you for having me, Danny. And God's entry's a good friend of mine, and it's cool to be here. And I obviously sharing a lot of any kind of thoughts on what's going on in the market. There's a great community. I obviously, we'll talk about maybe my position if that's something that you want to get into. But I mean, with respect to specifically, the Veve community and everybody that's on board when it comes to influencers like yourself or market analysts and traders specifically, excellent, professionals like God Entry. I always it's my pleasure being here.
Yeah, people are excited, man. They Sound Money thought you rugged again, but he didn't rug, man.
No rugging.
No rugging.
I'm sorry about that last time, man. I do apologize for that.
That's
but yeah,
life, man. Life happens, brother. So, what do you guys think? And you guys want to start with some market talk? What are you guys expecting?
Charts a little bit if you want.
Let's start with some charts.
Wait a little bit. You get some more people here.
Let's give it a minute. Last time I spoke to you in like Telegram and stuff, we communicate here and there. I see you posting. You were kind of bearish on overall markets. You still bearish?
It's that's a great question. I mean, I had a podcast with Cavell back in June, and I listen. I'm not the expert. Like God's entry, he's the expert. We communicate, often, obviously offline, and I have my own philosophy. I just don't have it from the trading principles. I just have it from just market analysis in respect to where I am and my experience with real estate and financial markets. And those are the only thing that I go off of. And so, if it's a matter of, giving you my opinion at one point in time, it could change less than 2 months or 3 months later. But here we are 4 or 5 months later, things not necessarily changed. So I'm still kind of like in bear mode, but from like a day-to-day or a weekly or even a monthly, like in those time parameters, God's entry is more inclined to give a little more as to a future aspect of his, genius versus me. But going forward, it's tiptoe as we go. I'm really not making any moves right now. With these, I'm actually invested in some hard assets with real estate, and I'm still doing, the flip action that we do, my wife and I. So we're still moving it because the market is still hot. It's still a seller's market, and demand is still overriding the inventory. So as long as that's in effect, I'm going to still ride it, even though interest rates are kind of just, kind of sort of plateaued, even though they hit a little top. They're still relatively low in retrospective, historically speaking. So, but with crypto and specifically where we're at, obviously, God's entry has a lot more insight.
Yeah, I mean, got enough people here. We can do some charts or
do some charts.
Yeah. Like
Justin, thanks for the super chat. I think this one's for you, Pags, because he wants to know if we should buy Omi in a World War IV scenario.
Great stuff. I think Albert Einstein said, I don't know how World War III is going to, finish, but World War IV we're going to be fought with sticks and stones. And it's so important. That's so relative because, what I believe has really nothing to do with what you should do. And I always say it's your own, you have to move at your own accordance, but any kind of world wars like that we have, it's not like going to be like it used to be, because there's no more like, there's no more like getting people on board and, pulling people in and going on. The other countries are still doing that stuff. signing people up and recruiting. You know, us, this is a different kind of war. We're in technology times right now. This is, you know, strategic. You know, instead of going and putting a nuke on someone and hurting everybody and hurting the world, not just from agriculture wise, but everybody that, you know, one bomb goes off, it'll affect it. You could be a cold winter and you could damage crops. Those people, like, think about it. You're a president. You're president of China. You're Putin. Do you want to live underground for the rest of your life? Do you want to do that? Because that's what'll happen. You'll go underground. You'll never see the sun again. And do you want that? Because what are you going to eat? Are you going to, because anybody that hits the nuke button, they're in the same game as no matter, everybody's on the same rank at that point. Whether you're a poor person or a rich person, everybody's got to go burrow, and who knows when you're going to come out and who knows what the status is going to be. No one wants to do that. It's more strategic, you know, whether it's a chemical, whether it's a virus spreading, you know, terrorism, like on that end, or it's just straight up just EMP stuff. Because if the internet went out, or electric went out, you know, natural gas reserves went out, we'd be, that's problematic. That's almost worse than, because think about it. What happens with supermarkets? Electric gone. You know, there's no more Wi-Fi. How can we talk to each other? How do we communicate? You know, EMP stuff, that's very, very delicate. And sometimes that's worse, you know, with civil unrest than it is just hitting a bomb and everybody just kind of, you know, sheltering in. So, you know, should we buy Omi? And I mean, sure.
Why not?
Let's go. Go ahead,
the number of the world war that's going to be is how many zeros we'll probably have. So yeah,
an infinite amount. Go ahead, God's entry. You want to get
All right,
into?
man. We'll do a little charts. Thanks for having me on.
Yeah, charts here.
Yeah, I'm gonna try to be very unbiased here. We'll look at both directions here, so I'll do my best. Not be too macro bearish for everybody. Even though I've been for a while, I'm just waiting. You know, I've been through a few of these cycles and I see something brewing. And I'd rather, you know, I'm trading at the moment, but I'm not so much in investing. If you're investing, I think you should be standing by the exits, at the very least. I won't be thinking it's a full-fledged bull market just yet. All right, but to get started here, I'm gonna look more at the broader markets, not just crypto, because it does affect us. So we have here is the U.S. 2-year Treasury yield and a 10-year. So basically, we have an inverted yield curve. That's illustrated here in this chart right here. Here, when we're in the red, it's inverted, and the real problem comes in when it uninverts. So if you look back here in 2000, down here's the Dow Jones. Once we cross uninverts, both examples are showing you this, we have a crash or a correction, whatever you want to call it. This was 38% back in 2000. 2008, 2007 rather, we had a 52% correction crash. 2020, once we lost this right here, we had a COVID crash. And we're coming up on it again. But the problem is, this is the biggest inverted yield curve in history. So really, who knows what's going to happen when it's uninverted, quite frank.
Can you explain an inverted yield curve to people who might not know what it is?
All right, well, I'm not a bond expert, but
Yeah,
my general understanding is you got the banks borrow on one end and they loan on the other. So right now, you're making more money on a 2-year than you are a 10-year. So there's no way for the banks to actually lend out money for an extended period of time to make that 1 or 2% profit. So really, the 2-year needs to be below 10-year percentage. So that's what this is illustrating. Matter of fact, once we move to the next chart, we'll see that. But let me finish this real quick. Open this up. So make this a little bit bigger. So generally, when we cross this red plot line, that's when the markets begin their descent. This is the bond market, though. So basically, when the bonds percentage come down, that means everybody's buying them. So they're moving their money from traditional markets into the bond market. That's what this is. Trying to figure out how long this could take before we actually start a correction or crash, whatever you would like to call it. The longest I could say is here, I'm taking a little fractal here. And generally markets, they they do their corrections in October, November, or March. And generally that's because we have a Santa Claus rally at the end of the year and the beginning of the year. All the hedge funds, market, pensions, they have to allocate funds into the market. So we generally don't sell off until like, February, March. We make it till Christmas. We should be fine until
Until when? What was that piece?
like February or March. But we'll see what happens. I mean, we could start the end of this month, but it looks like we're getting a little bounce here. It could take a little time. But I just extended this over till March. February, rather. Beginning of March.
Yeah. Now see, do you see? Go back a little bit. Go like shrink it a little bit more so you can see. Yeah. Do you see where we're at right now? Right.
We're right at the inflection point. That's
Right.
why I have this mark.
Do you see, Danny? This is just obviously whether you are aware of the markets or not.
Mm-hmm.
Just from a common sense, looking at the past and looking at where we're going. Do you think that we go up and above? You think this thing just starts to, because look at that back, how low it was. Do you think we go way up and over? Do you think that we do? You think that we do that knowing when the Bitcoin halving is coming? Does that translate to pre-Bitcoin halving time periods? No.
Yeah, we need this to happen before the halving, really. Because if not, this is going to come on down on top of the halving, which we've never experienced. So
and with the inverted yield, like these are historic situations.
Right.
And when you have uncertainty in historic situations, and you got war, and you look at the macro and some other stuff that's going on in an election year, dude, these bottlenecks have never happened.
Have we ever had it? We're coming off, we've had a couple of crashes now in the last few years, and the overall market is almost back to all-time highs. Have we ever had that where we have this recovery from almost back to all-time highs just to see another crash in such a short time frame?
Not with interest rates where they're at, and that's all, and that's all bond related. This is too, you know what I mean? You can't get everything all in one shot. Yeah. Something has to be reflective of the other. The answer is no.
Something's going to break at some point.
And I'm telling you, from what I follow, like I look at other stuff too. You can Google this stuff. This isn't my speculation or me being prophetic here. This is the reality. When you look at, like, specifically BlackRock, look at the Vanguard and the BlackRocks of the world. Mm-hmm. When you see the behemoths, the CEO of BlackRock moving out of specific, equities in volume, that it's not the big guys making the big moves getting out before something big's going to happen. Upward. Never. You'll never see Warren Buffett dump like he dumped, and the things that he dumped ever go up, or markets go up. It never happened.
I think he's sitting like 180 billion cash right now.
Yeah, he's in
Warren Buffett.
He moved out of, this is going like back already. This is back already prior May. Back in May, he made the moves. Look at you could see it's public information. It's insane. This is all I'm saying. So for me, I've been in a few of these, and I've never been in something like this, if that makes sense.
This is different. Very different.
Why is it different? Yeah. Is because the markets aren't behaving the way the macro outlook
it's not different.
Dictate it?
I don't think we've been in a situation with the rates they have with the inflation at the same time. So they before they could just print the money and get us out of it because we didn't have the inflation. So they really can't do that right now. So,
especially with the, obviously the political temperature right now is not great. And we haven't had this much movement with respect to, like, Speaker of the House going out. Like, there's just a lot of weird shit happening that's never happened. And with the inflation being at an all-time high and the national debt being at an all-time high, these are just, as I'm saying, like, all-time high here, all-time high here. 20-year high in this area, 20-year high in that area, and then you throw the war in there, and we still, everybody's just talking about the war, this war. What about the Ukraine war? It's still going on. That's still happening. Like, it's not just, we're just a little new war, a little Israeli Palestine thing, and where other Lebanon, other countries coming in, Iran.
But traditionally, markets kind of shrug off wars, no?
It's what I'm saying is, but in a time period of uncertainty, and where obviously we're trying to like focus on market moves.
Yeah,
we've never had the collective events that are happening now all at the same time. We've had them hit with maybe, okay, we had a little something go on because we had COVID. Oh, that was a little something. But then we had, maybe a little bit of war. Maybe that was a little, obviously 9/11. There's always one little thing. But in those periods of time, we didn't have inflationary risk being at all-time high. We didn't have the debt where it's at.
So why do you think things haven't broken yet, right? I mean, like the point of raising rates is to kind of like break things a bit. And yet things haven't broken. You're talking about, the real estate market is still chugging along and demand is outpacing supply. The markets, traditional markets, are heading back towards all-time highs. Crypto's back on the move. In spite of all
this is where God's entry is going to come in, and he's going to explain this because the way that market makers and manipulation. Go ahead, you tell him, because I know you know the answer. He knows the answer.
This is how long it takes for a market maker to get out of the freaking market. It takes years. You can't just drop everything at one time.
This is what he taught me that. Like I'm waiting for that freaking huge just fall off a cliff stuff.
Yeah.
They get it, and it's just a slow grind, and then it just becomes like, and then you get a little upward, and because that's what going sideways is. But going sideways and going up and going sideways and going down isn't the metric. It's really, you need the cliff. Whether you hit a brick wall and it goes straight up or a drop off, the market makers and the way that things are manipulated, we're obviously, when it comes to shorting markets, I'm not 100% like, I'm not inclined on that end. But I know that when you start seeing, the puts, it's going to just go from there. And
more shorting the market than they do long in the market.
It's gonna come like never ending. It's one of them. It'll happen, but because it's going to be, you have to get in line. It'll be like being at a deli. You'll have your ticket, but you got to sit and wait. And that's really where we're at right now. Everybody's sitting and waiting. And it's like, oh shit. The reason why the real estate market is where it's at, and I'm gonna. This is a direct impact of other things other than interest rates. Is that like we haven't the psychological impact of Powell coming out, and when they start to make demands on specific things, we haven't got that. That's why rates, he didn't raise anything. That affects mortgage rates. And also the fact that you don't say we're in a recession. When people don't hear that psychology, they don't believe we're in it. So if you don't believe you're in a recession because it hasn't been designated as a recession,
generally when they say recession, we're towards the bottom.
We're towards the end of it, right? Because it's backwards looking. But I feel like the sentiment amongst like retail people is that they feel like we are, and like they feel the squeeze on their wallets, and they feel uneasy about the economy.
Go to the supermarket and go to the gas station. That for me is the metric. And if you ain't feeling it on those ends, then you don't got to worry about the market. You got enough, you got enough expenditures. It's okay for you. But if you're feeling it at the gas station and you're feeling it obviously at the supermarket, those are your guides, bro. That's the true inflation. That's really where it's pulling from.
Yeah.
And it never goes back down.
No. And I'm telling you right now.
But wages increase.
In the last 6 months to 8 months, I'd say probably closer to 8 months, the rental market rents, like the specific amount that landlords, it has gone up 15 to 30% overnight. And I don't know if you felt it in Queens, because you're obviously, this is tri-state. We're here in Jersey. So this is the reality. It's a reality. Yeah. And I'm obviously a suburb out of Newark. So I'm hardcore in the biggest urban center, largest city in New Jersey. And all of the suburbs here and going out even a little more west, not that much farther, 15 minutes from Newark, brother, things that were like 1,800 or 2,400 right now.
Yeah, it's crazy.
A month overnight. I say overnight, 6 to 8 months is a long time. If you were a landlord, you were charging 1,800 in last January, and now coming around into December, that lease is up. You're going to want to evict them because you're not even market rate right now. You're 40%. It's too cheap. And why I say that is because that is, we haven't, we're starting to stabilize a little bit when it comes to like sales with numbers. Like there, obviously, if something's like, banks are still giving loans, right? As long as you got a great credit, history, and you're good with your income, you're going to be fine, right? But the comps are still there. So banks are still going to, people are waving appraisals. So the banks don't care. The bank's like, all right, if they're waving appraisal, the transaction is going to go through because it can appraise for less. The bank don't care. You're still going to put down 20 or 30. There's people are coming in $700,000 homes. They're coming in with 200,000, 300,000. It's still gonna appraise for after they put that deposit down. There's enough equity in there for the risk for the bank, so it don't matter. Even if values diminished a little bit, demand is still going to be there, so it don't make a difference. So all of these things you have to take into consideration because, when people are walking in off the street and they're coming in with however they got their money, whether they saved their money, whether they got an inheritance, or they're a trust fund baby, however they got it, they're putting it into the equity, into that hard asset. So the risk of the bank is, that's why right now things are still, it's not like so hot. Like when you get an open house, there's not like, 60 to 80 people, but there's still 20, 30 people. That's still sick. You're getting like 10 to 20%, you still got, 5 contracts. You're still doing highest and best by a certain time. So there's still, people are still going up and over ask.
Yeah, down the block. I live in Queens. House down the block from me. Small house. It's a Queens house. $1 million, close to $1 million. Went over asking on day one of the open house.
It's just you're in the Mecca. You're in one of the 5 boroughs of the busiest cities in the world. We're in Jersey, but we're in Essex County, Essex and Bergen County, and Essex County is the richest county in the state. And obviously Newark being the largest city, being suburbs out of the largest city in the state, in this urban center, it's every to and from New York, to and from Jersey City, or Hoboken or Weehawken, any of the higher, obviously the financial district of our city is in Jersey City. You're on a train within 20 to 30 minutes. You're at your door working from your home, and these are the suburbs that these trains are going through. They don't even have to take buses really as much anymore. And those suburbs that are renting out or selling out these homes, people want them because it's to and from their door. They don't got to it's not an hour and a half to 2 hours in traffic anymore. You're in the Mecca. So, a cab, an Uber, and you're there. I don't look, there's a side of me that feels, like there's still room to grow in the real estate market from an investment standpoint. I don't know. I don't ever count tops out because I'll never be right, as I won't be right with bottoms. But God's Entry is a trader. He can make more money day to day for him and his clients in a week, in a month, or 3 months or 6 months than people can make sometimes in a lifetime. On the investment side, so from an investor where I'm holding through bears and bulls, if I get caught out there and I don't have investment advice to get out, I'm holding bags.
Promise everybody gets out at the same time, and that's what causes the fear and the capitulation.
Correct. Have we capitulated yet? Have we even got signs of that? Think about that, Danny. We haven't
in which market? Which market are we talking about?
None of them.
Well, if we look at, you don't think that the crypto market capitulated when Bitcoin went to 15.8 and alts bled 95%? If that's not capitulation,
no. Well, I'm gonna say in my past bear markets, I remember not hearing any moon boys anywhere for a little bit.
But is it
It
right?
never
And
stopped.
I
Once
get
we got
that.
that capitulation and we went right back at it.
Yeah. I
But
think
nobody
though,
gave up is the problem. So it's kind of making the bear market take longer,
yeah, my
in my
counter to that would
opinion.
be that this, crypto is an asset class that's in its infancy. And as each cycle, as it has another cycle, people wisen up to how the cycles work. And so with each cycle, you're going to have more people holding on who understand how the cycles work, which is why, it'll drop 95%, but you still have people now on the sidelines because they know what happened last
Well,
cycle. And now
I
that's
ha-
the time when you make
I
money.
do have a theory for you though.
Go ahead.
So
Wait. Before Billy, just
unless
jump
you're,
in. But you have to
come on.
realize too, as a metric, you have to consider, the last cycle and cycle prior, we didn't have AI algorithmic trading, and that's brought a lot of people into the
Yes,
game that never.
yes.
Go ahead, though. Go ahead.
What I was going to say was, unless you're actively trading or a market maker, you're a non-market participant. So whether you're holding or not holding,
Right.
the market is predicting the price for you. So just because you're holding something doesn't make the price go higher, because there's
Right.
more money in a derivatives market than spot market. So that's what drives all these markets is derivatives. It's not the person on the sideline holding. They can all hold, but unless they're in the market, they cannot control the price, or less. I mean, if I said that correctly.
I mean, we obviously we're all privy to what we see on the news, TikTok,
Mhm.
Twitter. I mean, it's we still haven't even the verdict isn't out yet with respect to like the euro with the union, the EU with the CBDCs,
Yeah.
and that's a whole nother beast, and how they mandate that and those political functions and how that really trickles down, that can have a significant impact on the markets, generally speaking, not just in the EU. So these are some of those also unknowns that they're right around the corner. You heard what what's her name said, the chair over there. She was talking about CBDCs and what they're doing
Oh,
already, and
who are you talking about? Elizabeth Warren?
yeah,
Yeah, but the only way they can do that is, bring the market down so everybody wants it, accepts it rather.
I know BlackRock and I know Vanguard. I know any of those. They're not buying at 30,000. They're not buying at 25,000.
Maybe they were buying already.
No, they just put in the information so they could buy. That's why they're letting everybody know they're buying it. So when they do buy, it's already public knowledge.
100% perfect psychology. That's exactly right. And I'm
But
telling
let's talk. We talk about capitulation, right, and whether or not we capitulated already. We've been through the Terra Luna collapse going to zero, algorithmic stablecoin going to zero, cascading effects from it. Celsius going down, FTX going down, war in Ukraine, record high inflation, all of these events, banks going down, and crypto went down along with it. So, what would it take for another capitulation?
Black Swan.
Right, but black swans are not predictable, right? By nature.
Nothing. That's the only way to make things.
I think they haven't. The problem is crypto and Bitcoin hasn't been what's about to go through. Which
You think miners capitulated, Jay?
I don't have that here. Not yet. No.
Exactly.
But
Let me go through a few charts here real quick.
And I think anything.
I want to get to something because you were asking something. I have something good. Let me
Good,
do
let's
like
do
4 or
it.
5 charts here real quick.
Yeah, thanks for the beer money, Maxwell. Appreciate you.
Somebody asked about the gold chart during the
Yeah, let me
inverted
scroll
yield
up.
curve.
Someone asked, yeah, let me pull that one up.
But I do have some good charts to share with everybody. Because sometimes visualize things is a lot better than
Yep.
somebody speaking.
And I am ready for all outcomes, right? I mean, I can see it. I can see like all these things that you guys are talking about in terms of the macro and the debt out of control, and things are still a lot of things still hanging over us. So I'm open to everything.
This is the
But at the
gold chart.
same, say it again.
This is the gold chart, which his name
Yeah,
was
let's
asking
talk
about.
it. Go ahead.
So basically during inversion, all we did was run up range. Nothing has happened with gold. Currently have a nice triple top here. Basically, I'm not a buyer of gold.
Right.
So you get
Wars in general is a washing machine.
So unless you're like right here, you're gonna press up. They're probably looking to short it right here. Quite honest. Here, I got a couple charts here. I'm gonna go back to the bond chart. Remember when we crossed this This is the Dow Jones. We have a crash in the market or a correction, a strong correction. We know what happened in 2020.
You're right. Black Swan doesn't count, but it'll expedite.
You know, Bitcoin had a pretty massive dump during the COVID crash that nobody expected. So Bitcoin's not going to save you. We already experienced that.
You're talking about
Oil
Bitcoin being aligned with traditional markets during the COVID dump.
Well, actually, everything goes down. Everything goes into what they call reevaluation. Remember, even oil went down. Gold and silver went down. Everything went down. And then Bitcoin was the first thing to go back up. I'll tell you that. It was the first thing to recover. But still going to have to weather the storm. So anyways, we're back to this chart. This is the 2-year bond chart. What I'm trying to show everybody, and I do in my Discord all the time, we spot out these divergences. This is on a high time frame on a weekly. So every time you get a divergence, and basically a divergence is, you know, this is the RSI, strength is running down, price is running up. So at some point they have to come back to balance, creates a divergence. So the 2-year had a divergence right before the crash, .com bubble. We had a nice divergence here before the GFC, 2008. We had the divergence before 18. I'm not sure what happened in the market then, but I'm just trying to illustrate divergences work. And this is a huge divergence that we currently have. So what I'm trying to get at is I believe we have topped out on a 2-year, meaning the rate should come down, the yield rather should come down, and we will uninvert and will cause pressure in the rest of the market. So that's why I'm watching the 2-year bond. All right, let's go to S&P. Something real quick. Actually, let's do something with Bitcoin so everybody gets something. All right. So this is Bitcoin, the BLX, the liquid index. Down here is the volume in white. Okay. I just want to show you something. Price volume needs to trend up to support inclining price, so it's sustainable. Volume runs down, price runs down. Volume ran up, price ran up to sustain volume. Go here a little bit more. You see, the volume is running down, price came down. Volume is running up, something like this. Sorry about that. Price is running up, volume's running up, sustains price movement before the bull run. That was back in 2020. Okay, let's go over here. Let's find some examples when this doesn't work out. Okay, so during the bull run, volume's running down, price is running up. That's unsustainable. We came down.
Big time.
Hard. Here, how do we reverse? This past year in January, we called this in the Discord as well. So even though I'm bearish, that doesn't mean I don't take long trades and point out major reversal points in the market, whether it's a bear market rally or not. But here's another example.
You did that a few times, in fact. I remember you hit me up.
Price is running down, volume's running up, so it reverses the market. What do we have here? Price running up.
Volume down.
Volume running down. What do you think is going to happen?
Big time.
I'm just trying to visually show you. We don't have the volume to support this price right now.
I always said it. The liquidity is just not there.
That's a big problem. That's why these movements are so big, because there's nobody in the way to buy or sell.
But isn't there also record low Bitcoin on exchanges now?
Inventory?
Yeah.
Yeah, but they can take those Bitcoin and short it with it. That's my point. Just because there's, people are holding spot Bitcoin, I don't know if they understand the derivatives market. You make more money shorting than you do longing. Because when you short, you're accumulating more Bitcoin and price is running.
And the leverage with the leverage up.
Leverage, and it's running with you. When you're longing Bitcoin, price is running away from you while you're accumulating, while price is going up. So you make, bottom line, you make more when it's going down.
Yeah, the multiplier's higher. The multiplier.
Market makers want it to go down.
Yeah. How long have we been in a bear market?
Oh,
well, if you how you define bear market from when it started.
Really, the bear market started back here in 21. Even though we've made clear this high here, to me, I believe it started here.
So is this then if would that then be the longest bear market in crypto
Yeah.
history? Yeah.
Yeah, pretty much.
Because you say
Also, but it's also maturing as well. So,
Right.
that 4-year cycle thing may be out the door. I just thought it was interesting to share this chart with you so people could see we just don't have the volume to support the price right now.
Yeah.
Now, to be a little, let's find something bullish here,
And wait, let me just jump in right now. Another obviously these are other factors, but like you said, Terra Luna going out, Celsius going out, FTX, and FTX being one that is a little bit different than Celsius and Terra Luna with respect to the fact that you had or have a stadium, an actual football stadium, FTX stadium. When you have people like celebrities that are pushing it. Obviously, Kevin O'Leary and what's his name? Brad. What we call the quarterback.
Brady. Tom Brady.
Yeah, Tom Brady. When you have these people that are kind of like endorsing it, the psychology becomes a lot more secure. Now something like that has never happened, and you got a lot of fraud. It's going to push a lot of that liquidity and a lot of that confidence out of the market, because now if you can't trust Tom Brady and Kevin O'Leary, Shark Tank guy, guru, billionaire, and they got fooled, they got pulled, they're not coming in. They're not that volume is not going to come in.
Yeah, but I feel like crypto has had these every cycle.
Listen, I was very fortunate. I obviously was very transparent about it.
Mm-hmm.
Back in 2021 when I was with Randy. I was telling him about my story with Cardano, how I came. You could have basically threw a dart at the dartboard and hit something. You would have made a lot of money if you put money in. If you bought in early 2000, this is where I was at, heavy. I got very fortunate and made a lot of money, and I did very great, and I'm grateful. But why I bring that up is because there was no previous metric that I had to worry about because of fraud, or there was none of that. In
what about Mt. Gox?
No, but Mt. Gox was, people don't even know. 9 out of 10 people don't even know about Mt. Gox or what the hell that was.
If you were in the cycle, you would have known about it.
Yeah, but the cycle didn't really kick in from a standpoint because we didn't.
You know what?
We didn't have We didn't have TikTok. We didn't have Twitter. We didn't have a lot of the other stuff that was really pushing mainstream media out as much as it is now, or right around 2000. And everybody was home because COVID kept everybody in. So it was the perfect, environment.
Well, that was a perfect
brainwash.
That was a perfect storm.
Yeah, and
really, that was an everything bubble.
Right. You're right. But what I mean is, what I'm saying about Mt. Gox, you had to have a specific amount of money. You had to know people. And in fact, in 2017, I invested in Polynex. The way I got in, I gave $1,000 up to Polynex. It took 30 days for my account to even be. I didn't have my money for 30 days. I couldn't do nothing. And then my XRP went up and down. My transaction got executed while it was going up. By the time I got my account to look at it, to view it, it was already on. I already had lost money already.
Yeah, I mean, my point is that
it's a different environment.
There was a big stigma around crypto, and especially in those early days where it was only used for drugs and gambling and things like that. But now, yeah, sure, we have the FTX debacle and Tom Brady and all that stuff that was associated. But now you also have Visa partnering with Solana in a bear market, Bank of America and all the banks partnering potentially with XRP, Shopify partnering with Solana.
But you know what that is?
Elon Musk and all the biggest financial movers on board. Tim Cook.
You know what? And listen, and those are real. But people that heard my story, my friends and family, and a lot of people that were around me, they heard my story, but people already had money already. So it's not just another story about how I made a little bit more. Granted, almost 7 figures, doesn't matter. It's not irrelevant. What I make a point is that to talk or to make people get more enthusiastic about something that I'm doing or I did, for them, it was 4 years ago. Right now, what they have is, I bought some of that Dogecoin. Oh, everybody, I bought some baby Dogecoin. I bought the dog coin. They don't even know what it's called. and they just bought it on Robinhood because they thought they were a part of something. That shit's a scam.
But I
lost
feel like
money.
that happens all the time, and
And
those
and look
people
at
will
they're gonna
circle back.
yeah, they're gonna look back at the Kevin O'Leary Shark Tank guy lost billions. I'm not getting into that shit.
But let's talk, like, even my brother, for instance, was buying he was buying everything with alongside me in 2020 when everything was going up. He was in on crypto. People at work were in on crypto. Everything tanked. Solana went to $8. ADA was at 24 cents. They weren't touching it.
I bought it at 3.5 cents, bro.
Yeah, I know you're talking about last cycle. I'm talking about this cycle.
No. Or April of 2020.
Yeah, I'm talking about now. I'm talking about
you're talking about
this year.
Oh,
right.
You mean this drop now?
Correct. Yeah, they were, things tanked. Solana, $8 from 260. ADA from $3 to 24 cents. None of them wanted to touch it. Last week, they started calling me and asking me, what should I buy? People chase, money. And when the market turns around, retail will jump back in, is what I'm saying.
I think, and obviously,
It's
God's
very possible. But
yeah, God's entry have more to say on that from a psychology standpoint.
Yeah.
At least from that. But for me, I have my own philosophy, and I'm in the people person business. Everything from whether from my education to my experience in the food industry, and obviously in the real estate market, and obviously investment circles that I've been involved in the last decade. I'm telling you, what I listen to is what makes me come up with the theories that I have, and I'm almost spot on. And add some trading philosophy and expertise from God's entry. It's just like it's a perfect wave for me, and I'm riding it out because I really believe what I believe. Everybody, we're in obviously the what you would consider, obviously the NFT market with Veve, and that's how we kind of like cohorts of how we're related here. But we all have investment, interest,
right?
And so it doesn't matter what you invest in. It really doesn't. Markets are markets.
Yes, they all go together.
Right. And you'll feel it. I just believe that, Robert Kawasaki, the one that,
Rich Dad Poor Dad.
Yeah.
That guy's a clown.
Time out. Look, he might be a clown, but I'm going to tell you one thing I'm going to tell you something.
Yes.
Okay. The guy owns over 10,000 units, real estate units, homes, buildings, condos, townhomes, strip malls, over 10,000. Okay. This is a guy that's older. He's been through all of it, and he understands the markets. He understands assets. He understands how the, cash and liquidity markets work. You got to listen to people like that. And I'm not telling you what you have to do. What I'm saying is just listen. You don't have to do things, but they can't, if they were wrong more times than they were right, they wouldn't have what they own. Okay. Like I said, I'm not a crypto genius because I got lucky in investing in Cardano at such a bottom rate and it made so much money because I got out in certain times with the circles and resources I had. I'm not an expert because of that. But when it comes to market philosophy and what I believe and what I hear, and family and friends and people who are not as fortunate like me with respect to like whatever their net worth is, and they start talking, I'm in the grunts, like I'm in the mud. I relate to people who don't have any money to people who have deca millionaires in my circle, on my talk to often. So having that kind of like when you absorb this stuff, you start realizing you're like, wait a minute. I'm hearing that from over there, and I'm hearing that from over here, and then I'm hearing billionaires speak, and I take it all in, and I'm like, and we have meetings like in our real estate company, like when we're in the meetings, this is not just a little network, global network, actually, more so in the United States, but they have offices all over the world. And when you start hearing about different things and what are going on in different countries, and you're like, wait a minute, you start putting things together, you're like, you see it, you see the clear picture. And I hate giving my advice, or I hate giving my opinion out. I hate it because I'm either 100% right or I'm 100% wrong. I'm never like, it's so. But just this moment right now, I'm out.
I would love to be bullish. I can tell you that. I'd get more followers.
Let's talk about let's get back to your chart here.
All right. We got a few charts here.
Let's see what we got.
Here we go. this is trying to show you what's happened here in the past. The CME futures launch, on the date it launched, was the top of Bitcoin back in 18. When the Coinbase IPO launched, the date it launched was that current top of 21. Then the BTC futures ETF launched. It was the top here, 21 as well. Right. So I'm kind of hoping this does get approved so we can get a top and get to the bottom and get, back to the market is what I'm thinking. So what I'm trying to share is these, ETF is not a bullish thing at first. It will be long term. But what I don't people think they realize is they're going to do a long ETF and a short ETF. So they're going to be able to short as well. So, and they're not going to buy Bitcoin these prices. There's no way.
I mean, this really, that's another thing too. It really comes down to where you're at, Danny. Like anybody that's listening, if you want to make money, real quick, it doesn't matter whether your decision is that you want to short or you want to go long or how you want to do it on the short term or long term. That doesn't matter. You have to make that decision. That's the risk reward, right? What you want to do. So, for me, I have investment mentality. Because I look to hold a bag or bags going forward, but I'm not jumping in right now because of two reasons. One, I don't like the macro. Two, I personally don't feel I don't feel confident enough that we're at anywhere near bottom.
Yeah, I get that, and I appreciate that and respect it. From my perspective and my strategy for what I'm doing is I'm trying to just build long-term bags. By long-term, I mean in crypto, cycle to cycle. Yeah, trying to build a bag for the cycle.
That's fine.
And
That's
I think
fine.
that there's also a risk of sitting on your hands if you're wrong, right? So if you're trying to time things and sitting on your hands and missing out on low prices.
That's for investing. That's not,
Right.
For me.
Yeah, you're a trader.
I don't care what it does. Just do something.
Yeah, yeah. You'll make money either way if you're trading and you trade it well. Bear market, bull market, whatever.
I'm just doing this too to also share, because my experience, I've been in the market so long. I understand the sentiment in the market.
Yeah.
Yeah. I mean,
when everybody's getting bullish like this, like right now, I'm on an island. Nobody's bearish with me right now after what just happened. Yeah. And I like it though. I feels good because I don't want to be with the herd.
And honestly, and I'm so grateful that he's in that area because without talking to him, I've been on the Bears' back for a good 5 to 8 months right now, like hardcore. And I was, in fact, Danny, I don't know if you, I don't know if you overheard me speaking. I had a few people around me at the OMI event, at Veve event. I was speaking specifically on OMI, and I think we were at 009. Yeah. And I said, if we go to 0007, I'm going to come out with 70K, and I'm going to go all in for 100 mil, back up to 100 mil. I think Randy might have been there, and he like high-fived me, and I was somewhat serious about that at that moment. But speaking to God's entry about the volume being so generic and just showing me some of these charts that he's sharing with you over here and everybody.
You're not going to get
my confidence was pulled right out of me. And look what happens. I would have just lost, about 15 or so % of that 70K from where at 7 to where it is now. So it's just insane, bro. And that just pulled me back out of getting back into my game again. And now,
so would you decide on possibly DCAing back in if that was your long-term plan?
It's just I keep, what it is, I keep going in and out of my psychology moments, like with respect to like what I really believe in and how long I want to hold the bag for. Do I want to lose 30% before I make 600%? You know what I mean? It's kind of like weird. I consider that. Now, don't get me wrong. People will say, you're just greedy then. I just believe like what I felt like with XRP, I felt it was going too high, 90. I got out in the 70s and some in the high 60s and in the mid 70s. When I was picking it up in the 30s, and I made the call. I was talking about it when I was in June when I was with Cavell about what I was doing and where XRP, what I felt was going to happen, and it did. And I don't want to be the guru. What I'm saying is that's how the confidence of what I felt because of other factors, and I was correct. And I don't want the I don't want to be the poster boy of this. What I'm saying is that these are the reasons why I make the moves I make.
Yeah.
It's because of when I feel confident about something, I take into consideration, and I'm either in or I'm out. And I'm not like being a trader, but if I feel like the market's just way overly
I'll get
bought,
it right. The other day, you wanted to short the very top of the market,
you're right.
and you were right 1 point.
You're right. But I didn't go. I didn't pull it.
You know,
But I'll tell you what, though, I'm bearish.
but you're really good. You're within hours of the top.
6 months from now, we'll see where we're at. Mark my words right now, compared to where we are. I know that sounds like a long time out, but people are like, hey, BlackRock, and they keep riding this BlackRock thing. Don't worry about it. I'm telling you,
This chart right here kind of shows you what's going to happen.
BlackRock didn't buy in yet, and they're not buying at the top.
So, God's Edge, let's get back to some charts here. Right. What else you got?
All right, so anyway, so let's finish this chart off real quick. So basically, a news event is generally a sell the news event, So plus we got this trend line here. I brought off the top back in 17.
Yeah.
Got a lot of support here, a lot of support here, a lot of support here. Then we broke it. So it's a pretty strong trend line. Well, we're working our way to it right here. So we have a couple other things going on here as well. That's what I call a naked chart. There's not much on it. Change this real quick. Let's do this on the fly. Let's get rid of that. You got a couple different things going on here. From a pattern recognition, if you want to draw patterns, you could have a rising wedge right here into major resistance or supply zone rather. You can obviously see it right here. You got this. You can also draw another pattern. This is a bearish pattern,
Ascending wedge.
You can also draw this. I'm just doing this on a chart because it's not much on it. It's a little bit easier. Let me do this one as well.
I mean, ascending wedges, where did they lead to in the last, just figuring?
That's what I was going to show you.
3 months after it peaked.
Well, I got another chart for that. I'm trying to do this for people that don't really, when there's too much on the chart, they can't really understand it. So this is a naked chart. So I'm just trying to show them. You see this pattern here? This bearish pattern? It's a bearish channel. Well, essentially, we're just doing the same thing, but just a little bit bigger.
You're saying we're going to fall out of the channel and go back down.
If we're trending down, you see when the market's trending down like this, bullish. We're trending down into descending wedge, popped up. Now we're forming an ascending wedge. We're going to come back down. So basically, the market is just building a higher point to bring momentum so we can break this floor is what I'm thinking.
And remember what we talked about the other day, off topic. I mean, on topic, offline, when we discussed about what you were looking at above 41 and how it's just like an empty void.
Yeah.
Please describe that because that's very important, Danny.
Yeah, well, I'm going to show you that one right after this one. I just want to show you this pattern here. I mean, people say patterns don't work, but I trade them all the time. They work pretty good. This is a bearish pattern. It's the same pattern here, but just more extended. It's overextended. So now the bullish case is we get above here. All right, ride it up. Buy here. We get above like 40K. We're going to probably run probably right here. So from a trader standpoint,
yeah,
we break this level and hold. I'll trade it up to 48K. So it doesn't matter to me, but I'm not going to miss this opportunity getting like a swing short because I like momentum swing trades. So because you can hold those for 2 or 3 months, they'll pay me every day. I'll never have to, I don't have to trade as much either. But that's a bullish case. We have to get above here and hold around 38, 40K for support. Then we can go up to 48K. That's your bullish perspective.
And what's bearish in terms of breaking down? We want to hold 32K.
We're going to do another chart. But it's a lower time frame. Hold on a second.
What's up, Walrus?
Let me zoom out here a little bit. Don't look at this. That's just a fractal. All right. So ultimately, these are your levels. I have them marked out over here. These are your major support levels. Now I got the 29K area. Probably move that up a little bit right here. 31. You got 25.2, 20,000, 17. I'm open-minded. We don't have to make a new low on this correction. We can just make a higher low. And then I'd be very confident that, maybe we'll start the bull market. But until we get there and I see how the market environment is, I'm not going to make that prediction. But Mr. Pags was talking about the liquidity in the market. Okay, so we're going to jump to that. I have to go into different time frames. I have these already marked out, these levels here. There's a reason I have those marked out. I'm going to turn on this indicator. Where are we at here? It's a liquidation engine by Rainbow Runner. It's amazing, actually. What it's showing me here, I'll just show you. It's a great indicator. It's showing me the actual trades that are already in the market by what leverage they're holding. So essentially what I'm trying to do here is find out where market makers at and where they're sitting. So that's why I'm using this, because generally when we get to their positions, we either fall short or we reverse from the larger positions. Now you see these two white lines here. I don't know if everybody sees it.
Yeah.
It started way back here in May 22. All right, and they shorted this little box right here. So a market maker may be one person or a group of people or an exchange. So people understand. And they make fees on these trades. So they've been collecting fees on this trade since May of 2022. Now, those are levels. There's no more liquidity above that. If I go to the 4 hour, and we got a little bit of 48K left. So, but if you look down here, there's more longs and shorts in the market. So that's like, from a whale's perspective, he can eat all those longs. Like, there's a lot of longs for a whale to eat, or a market maker. That's how you got to think about it.
In one bite.
One bite and one spot. So another point is, here's another theory that could happen. So this particular market maker here that's holding this position, pretty sure he got the long down here as well, because the market maker's objective is get the high and the low and just make the fees in the middle. They really don't care about the trade at all. They just want those fees for holding up the market. So if I was this market maker or whatever, I would hold this trade all the way up to my next position here. And I'm looking up here, there's no liquidity here.
See that, Danny?
So from a market maker's perspective, there's no reason for me to go long here. Everybody's excited. Everybody's bullish. There's an ETF. You know what? You know what I might do? I might sell my long and protect my short, because now I got all the liquidity so I can exit because everybody's bullish. That's how they think. I'm not saying that's what's happening, but that's how they think. And that will drive the price down just by them selling it.
Right. So then the question is how far down?
Well, that
Could find support, right?
Yeah. I mean, nothing's a straight line.
Yeah.
We do lower time frame stuff too, but I mean, let me go zoom out here a little bit. I mean, I'm looking for something to happen fast. Like, just so everybody knows, in past Bitcoin cycles, we dropped 85 to 90%. We haven't done that yet this cycle. Everybody forgets that.
You want Bitcoin itself?
Yeah, we've only dropped 77%.
From top to low?
Yeah.
But that's also, you could have diminishing losses as cycles progress also, because I think it diminished from one cycle to the next.
100%.
From first to second cycle, it diminished, second to third, etc.
Yes, and that's 100% possibility. Very true. But what I'm trying to say is, nobody left the market here. Like, this little candle here, these little candles, let me open this up so you can see better. Yes, that's capitulation, but this was capitulation coming down this ride. I remember the difference. People were.
When was that?
This was in 21. Like, this ride down was a lot harder than this little rides. This was all day.
Yeah, but that line was just more of like a straight line down, whereas this one caught some support and then continued down.
True.
So it could
have been
still be
there could have been
capitulation with a pause. You know what I mean?
there could have been buy orders that
Did
were still
anybody
up.
give up in the market? How
Danny,
long did it take for people to give up? Like all the
there could have,
YouTubers, they
people
didn't
could have
stop.
had their losses already fucking triggered in, and they figured, oh, you know what, this is DCA in time, and had the buy orders set, and they got triggered. So all those buy orders, they were registered, and then what happened? Bang, liquidity event, another one, and then it just probably triggered as a cascading, I mean, other people's limit sells, and then it triggered them, and as it got lower and lower, it just
Starts a
cascaded.
cascade, like a waterfall. Now here, what I'm going to try to illustrate here. So basically what I'm looking for on this chart, I'm going to give you a bullish perspective as well. I'm not just going to be bearish, but these are the levels that I marked out for those liquidations. Now, if we get above these levels, get rid of this and hold. Like I said before, we're going to go to 48K. From a trading perspective,
Right.
that would be bullish, maybe trade it up to here. But like I said, we still have everything going on in traditional markets, and we didn't get affected yet by, like, they are going to have an issue. It's just a matter of time. Now you want to see targets. All right, let's go to, this is what I think what's going on here, to be quite honest. This is I got this picture here. It's a schematic one of Wyckoff, the distribution pattern.
Mhm.
So I'm going to be honest here and say I didn't expect us to do this. I had it like this because I had the shoulders. I was going to short here. I attempted a short here. But I also warned everybody about 2 hours before it happened. If we break this, we're going right to here. I caught that little move there. So as a trader, it doesn't matter if you're right or wrong. You just got to have a plan for both directions. But anyways, I thought we were going to fall out of this bullish pattern with its head and shoulders, but that didn't happen. So now I'm going to this schematic. Distribute, where they kind of pull it up higher. They keep everybody kind of content. They start, distributing their bags. We had gaps up here.
Yeah.
One can look at this as accumulation. It's true. But where's the volume to support it? We already went over the volume. There's no volume in this accumulation. Just don't see it.
That's what I'm talking about. That's what I'm trying to.
So anyways, we still have these two gaps right here. We never filled them. So
That's a gap down to where?
the last gap is at 9,800. I'm not saying it's going to 9,800. I'm just letting everybody know, be aware there's a gap down 9,800. So if you want to put some fishing orders for a collapse, put them there. You know what I mean? I'm trying to give you the level.
It's such a sick thing to think.
But these are the levels, because at the time you're not going to enter the trade. You're going to think it's dead, going to zero. I'm telling you, you're going to think it's going to zero. But so if you set some orders, I'm not financial advice, of course, paper trade.
Dan,
but if you want to set some orders down,
you know why this is great to talk about?
Mm-hmm.
Because with respect to, and I'm not comparing markets, or I'm not comparing market sentiment in general. I'm just saying in this sense, right? With OMI, when we were at 006, 008, 007, even 005 range, this was when there wasn't that much equity in Veve yet. We didn't have that many collectibles and comics on the market that were, making that much. It was a lot of secondary market transactions that were taking place that were pulling away from that, either OMI burning or just at least being able to see that market sentiment as if it was bullish or not, because you couldn't see it. You couldn't see those transactions. Obviously, when transfer was in there was a lot of volume of transferring. The people were doing, give me X amount of USDT or Bitcoin or ETH stuff for your item. So why I make that a point is, here we are, literally even a little bit past 2 years from that point that I'm talking about, where there's so much more liquidity in Veve, so many more wallets that have been opened, so much more in the sense of market confidence in liking the fact that there's collectibles and there's somewhat of some OMI, what you would consider tokenomics that are involved, and you know, the utility being played into the Veveverse and stuff that's on the. We're rounding the third base with Veveverse. Apparently, things are happening, right? Because we were 2 years before that, and there was no Veveverse. So at least it was supposed to happen, but never happened, right?
Well, I think back then we thought we were rounding third.
No, right, but
Now
understand,
we're back
but
home.
take, right, but take all what I'm taking into consideration,
Sure.
and we're 90%, 95% lower, 98% lower with the coin's value. So why I make that a point when we're talking about Bitcoin, like, or at least the markets in general, you know, the opposite of what, because if you ever thought in 2021 that you'd have X amount of hundreds or tens of thousands of more people on the app, there would be so much more bought, so much more items to buy, so much more in there, so much more OMI bought, because people are buying OMI because now they're in Veve like everybody does. There's so many more wallets have been opened. Why isn't the price higher?
Well, there are less. I would say that there are, on the Veve side of things, there are less wallets because users have left and liquidity is dried up and supply is increased exponentially, right? Because they have multiplied on their drops. So you have more inventory, but less money, not less liquidity circulating.
I don't think that. I think there's more. I think there's more circulation because they took away the transfer. So it's all you could see everything.
Yeah. See, I think during that time it was a perfect storm in Veve where, you know, it was a closed.
That's how they crushed the market with the transfer.
But, you know, they were transferring, but like, you know, gems were 30, 40%.
It doesn't matter. Gems or not. I'm making a point. I'm just saying in general, when it comes to the confidence of opening up a Veve wallet and buying a collectible or buying a comic or getting involved has grown. There's been more influencers like yourself. There's been more podcasts on. There's been more people involved in the market. The community has grown. The people that have gone to that particular event that I was at was more than last year.
I think it's the flip side. I think that it's shrunk. I think that market sentiment, Veve sentiment, is at probably all-time low.
You think Veve sentiment is at an all-time low?
Yeah.
I think there's more bulls in Veve now than there ever has been.
I think there are a core, you know, users, and that's the strong foundation there. But when I can tell you about my YouTube channel in January of whenever it was, 2020, when was that run? 2021?
Yep.
My channel was growing. I made a video, I'd get 100, 150, 200 new subscribers every video. Now it's like, you know, if I'm losing subs or, you know, gaining at like a snail's pace. You know what I mean? I can tell even on like YouTube data.
Well, I know that too, but we're also talking about, you know, we're getting drops and they're still getting sold out.
They're not, though.
Not all of them.
Most of them aren't. If you look at them.
No, most of them aren't. But I'm saying they are.
Some do. Yeah, some do.
There are, and so, you know, it's like not that I say, well, it's easier to sell out now because they're making the additions a lot less. You know what I mean?
I will say I 100% agree with you in that you need to be ready for all possibilities, because you were saying when we were at 005, 004, whatever, and you were like, I'm out of here. We're going to triple zeros. And I thought, we're not going to go to triple zeros. That's such a psychological level.
That was that guy right there.
Yeah. Hold on.
Right there.
However, I want to also say that just because we were right before about going down, to say, oh, well, now be careful, we're going to go down even more, we run a risk of sitting on sidelines. Go ahead, God's entry.
Yeah.
Well, I'm going to say, before we do an OMI chart, we got 114 people here and only 26 likes.
Let's go. Hit the like button, people.
Do something here. Help it out. Yeah, we're going to do OMI chart here before the end.
Thumbs up.
Smash the like button, guys.
I'm still bullish on OMI and Veve. I'm just, at the moment, I'm being very protective. I don't want people to think, like, you know, I'm not fudding anything or anything like that. I'm just showing you what's going on outside of the world of Veve and OMI. Like, things do affect us, you know.
Of course.
Very
I mean, Danny, just to be a little transparent, just recently,
sure.
There was obviously, as you know, I had liquidated a significant portion of my holdings with respect to comics and collectibles, and I obviously needed to get a couple of items that I had sold for such a significant amount, and I needed to get an MC1 SR. I was able to get one. I came back in, got a great price, got it. A Spider-Man Secret Rare had to come back into the market. I'm just saying, like, I'm putting money back into Veve slowly at such very low and generic levels. They're so just plain out inexpensive in comparison to the upside, and the actual additions of those particular items are so low that they're the firsts, and so I think that if you just focus on some stuff that is relative to the real world markets and how much of an impact that they have on the retail markets in real life, and you translate that into what relates to it in the Veve world, I think you'll do well, because I think that obviously if the Miles Morales fandom that's been building for the last 4 or 5 years stronger than the last 10, and that starts to accumulate and gain that momentum, the Miles Morales stuff on Veve is going to supersede a lot of stuff. It's going to shake people.
And that's held up strong, even in this.
And I'm telling you,
strong.
Right. And the stuff like the Fantastic Four stuff, early stuff, Golden Age, early Silver Age stuff, those items are going to shock people because those editions were low and they were the firsts, not only in the real world, they were first on Veve. And like Todd, like the Secret Man Spider Rare, even some artists like the Risso, some of that season 1 stuff, it's gonna shake people. And I'm very bullish on that. And I think that if you can get them at good prices now, I think they're at the cheapest have been in since we've had somewhat of the oddity in the bull market in Veve. I think that they're great buys. That's what I've done, and that's what I believe. But with respect to like the OMI and the tokenomics, like going forward and burn rates and things that I'm not so bullish in it at the moment. I think there's certain numbers that make sense regardless, but I can't use that either, because I thought, when we were at 0005s, that was like oh my God. And got entries, like Henry, just be careful. And I could have picked up there and sold at 0009 and made, 60% or 80%. Yeah, I could have went crazy, but I'm not looking to trade stuff, But
is that like a temporary thing though, caught up on like short-term price fluctuation versus 0005 now versus, a year and a half from now? Will it matter versus 0007?
Yeah, that's a great question, man. I really don't know. I really can't answer that. It's such a great question because
It really matters to your plan. What is your plan and your time horizon? When you first get in, you should already have that set.
Yeah. Really.
That's how you answer that. You don't get into something without having a plan, because you're just gambling at that point. So when you get in, you should have your plan where you're taking profits. So when it gets there, your emotion doesn't tell you otherwise.
Yeah, 100%.
I mean, there's all type of things to try to.
Yeah, I mean, I feel the same way. Like with the gambling sentiment that I have, when I play poker and stuff, I go in with say 5K. I can say to myself, when I got 3K or 4K, not even have to double, just like in the 3K range, I'll get up. But that could happen within the first 20 minutes of me sitting down, and I don't feel, confident enough that I had a great. It doesn't feel good. It's not satisfying enough.
Right. The gratification's not there.
Yeah, it just isn't there. If I played for 3 or 4 hours and now at the very end, I look at my money and I'm like, I got $3,000, I'm up, I'll leave. So there's this psychological that plays into those questions that you really, if you answer them one way, they may not play out in every scenario because of other factors. You know what I'm saying? Don't get me wrong. You're never going to hit bottoms perfect or tops perfect. So you do have to come up with something like, an idea, whether it's a limit sell, put it in, then just set it and forget it just in case. And that's what I believe. Some of those particular, those fall off cliffs were just limit sells that were just getting triggered, and it just cascaded limit sells as it went down. And
there's no volume there, so there's nobody to buy
a liquidity event. And that liquidity event just,
Well,
domino from there.
that's what happens without the volume. There's
That's where
nobody
we're
there
at.
to fill the
That's
order.
why that's why this can drop right out of the sky with no volume. What's going to happen? You think? Listen, Danny, be honest, and this is just from us right now, right?
Yeah,
With
sure.
no matter who's watching. Are you telling me right now if there was some kind of no black swan, just an event that took place that created Bitcoin to go to 22,000 by this Friday coming up? Are you telling me to be people sitting there ready to go? Oh my God, no. You know why? Because they think at 22 it can go to 18 or 19, no problem. So
Right.
no one's going to buy at 22. You see what I'm trying to say?
But there comes a point where people like it'll stabilize and then slowly go up, right? So people weren't I was buying at 15.8 and 18,000 Bitcoin when people were calling for 12,000 and 10,000. And in the back of my mind, I thought maybe we're going to 12,000. But at the same time, I was thinking,
But
well,
you
in
had,
2 years, it won't matter. This is a good price and I'm buying.
that's a good plan. So you had a plan.
I had a plan.
That's just to show people you got to have a plan when you do this. You don't just jump in and hope something good happens. Hope
Yeah.
and praying doesn't work in this market.
Correct.
But
Yeah, I haven't regretted really anything, bro, and I'm very blessed for that. And I mean,
Yeah.
don't get me wrong. In the long term, can it bite me? It could, and I could lose the opportunity. But like, guess what? If I'm still that kind of long term investor, my long term is like 8 to 10 years. So if I'm out, if I'm wrong for a year, who cares? But if I'm right, oh, I'm going to have a bag that's bigger. I'm not going to be able to carry it. It's going to be that heavy. That's where my mindset's at. You understand what I'm saying? So either way,
Sure.
I'm okay with a 10-year outlook.
And it
Some
also
people-
depends on your station in life and where you are content wise in terms of reaching your long term goals and if you have enough to sustain you.
Totally. Right.
all right, I got a few more charts here, then we'll get to
Sure.
Omi. I think I got like 5 more charts. But you asked me, I put this on my Twitter. What's the worst case scenario? So I'm not saying Bitcoin's going here. I'm just trying to say this is the worst case scenario that I can see per chart. We're in this descending channel, which is ultimately bullish. We have this ascending wedge, which is bearish. So we have a bearish pattern within a bullish pattern. We have some pretty strong resistance here above us at 38K. Then we got this trend line here as well, the top from back in 18. We had support, resistance. I trust this trend line as well. And now resistance again. So here's a big thing when I'm in trade, I'm noticing trading, when you draw multiple trend lines and you have an intersection like that, it's what they call an inflection point. So it's very important so we can get a reversal there. But on the flip side, if we actually break this right here, we could have a nice shot up, and that's the bullish, side of it too. But my first choice would be, I think we're going to cool off here. So at the very least, to see where we're going to go.
Personally, I think that's 100% not going to happen. That's me personally.
What?
Possible.
What?
Breaking up to the upside.
Yeah.
Yeah, we got a little bit of liquidity, like I said, around up to like 40,000, 41. But generally, when you take out that liquidity, we reverse. So, and also we had this other trend line too, where we came down in COVID. Everybody thought this was the bottom too. Market went up, we came down, shook a lot of people out that were buying all the way up here. Just kind of feels like now, to be quite honest. This is how the market felt to me back then, how it feels now. So I definitely think we're going to get a flush out. I don't know if we're going to get new lows. I'm open-minded to anything. We could have a bounce of 20, a bounce of 17, make a new low. As soon as we lose 25, we're going to go down. 25 is the line in the sand right now. We got to stay above 25 to continue up, in my mind. And then, like I said, when the time comes, we wait to see what the market environment is and what's forming in the chart. I just want to share everybody, these are possibilities, but guarantee if it gets down there, people will not be buying.
I will.
You will. And anybody that's informed will. But most people won't. They'll just be scared.
And that's money that's in the market, Dan. New money won't even go near it.
Yeah.
New money won't even go near it.
Trust me. Another chart with Bitcoin. So I share in the Discord all the time. I tell everybody it's kind of monotonous, but if you learn to mark out divergences, you can find the reversal points. On the Discord, we called out this reversal right here, around 25K. We had bullish divergence, price running down, strength moving up. Like I said, I thought we were going to stop here around 31.7. I didn't think we are going to go all the way up here, but I had a plan in case it did. But now we've got bearish divergence as well. So we got price running up, strength moving down. So reversal is coming. Like I said, we could. It doesn't mean it's a macro reversal, but it's just, you know, a local top at the very least. Like I said, we can run up here. You know, when you see a reaction, I want to see like a hard wick get rejected. Then I'm going to know, all right, that's about it. So that's why, you know, when I'm looking at the charts, I look for the reaction as well. So I'm just stating that we got that bearish divergence playing. If I open this up a little bit more, this is on a daily. We actually already lost this trend line that we had here. Currently trading below it. It's usually a signal too. You want to, the RSI you can use as a leading indicator to kind of see what's going to happen in the future. A lot of people don't realize that because they don't, you know, they don't play with it enough to figure it out. Usually when we break this trend, it's letting us know that we're going to continue going down further. Most likely, not 100% probability, but it's usually what it is. You find one more. Oh, got ETH. These are my top ETH targets. Currently, too, here, what do we got? Oh, yeah, we got some more divergence here on the daily being played out. So, got hidden divergence right there. I don't know if this red line and this red line here. That's what reverses the market. I do see a little bit more juice in Bitcoin. We'll see what happens. Like I said, in the S&P, if the S&P can go up a little bit higher, not much. I got rid of the chart, but let me just show you something real quick. It's here. Yeah. This is my bullish scenario for the S&P. Let's do this real quick. So I got this trend line here, resistance. This goes back from 19. Resistance, resistance, support, support, resistance, resistance, resistance. So this is a pretty strong trend line. So at the best, I can see the S&P going up here, testing this line right here. And if we do that, yes, Bitcoin can go up and clear out those liquidations. But you got to remember, Bitcoin made its move before S&P did. So they're not really, you know, they're not moving in unison anymore. Like one moves, then the other. That's what's been happening over the past year anyways. Usually Bitcoin's the leading indicator currently over the last 6 months. So like I said, I don't see much more higher in S&P. And this would just make a larger double top if we even get above this trend line right here, this yellow trend line. This might stop us here. We also got the yearly pivot. That should reject us as well. So we got pretty strong resistance now. That's S&P. We got, oops. Now here's total 3. This is everything excluding Bitcoin and Ethereum. This is what gave you your altcoin run since October. Boom. That's why all the altcoins are making money. But we're also running into resistance right now. And this looks like a topping candle to me. Evening star. For a weekly. So this could be a top locally. So I would definitely take some profits in your altcoins, at least something, secure something. Like I said, you generally make 75% of your gains in the altcoins after the halving. So we have a lot of time before the halving. So, but what I would be doing right now is, hold on, let me find a different chart. Oh, before I go to that, here's Bitcoin dominance. We're still trending up. Usually we don't have a really full-fledged bull market until this peaks. So Bitcoin dominance peaks, and we haven't done that yet. We're still holding this trend line. I believe we're going to at least go up here to 58%, possibly 61%. I want to see Bitcoin dominance top out, hit some sort of resistance, something like it did back here before we went up. See, we peaked, and then the bull market really started back here in 21. Am I right? Hold on. Is it 21? We had 2 peaks there. Sorry about that. It's either here. I believe it was here. We see some sort of peak in the Bitcoin dominance is what I'm getting at. I don't see that currently. Total 3 out the way. Put this out the way. Oh, we got Omi. Then I'm going to show everybody what they should be looking for in a bear market to find the best altcoins in the true bull market, or what I usually do. Doesn't mean I'm right. So here we go. We got Omi. We got this other chart. Somebody was talking about accumulation. This is accumulation, which I think Omi's probably in right now. This particular pattern here. This is accumulation pattern. So at best, I see Omi. We don't bounce here. We come all the way down here into this 0003, 0004. That's my best guess to kind of create some. Oops, we come back up, something like that, and so on. We create some sort of string like we got there. That's my best guess for Omi right now. We're going to create some sort of spring and then come on out of this. The other chart here, these are your levels. What I was trying to share here was, I posted this as a possibility. I just took this little fractal here. Let me move this over. Anyways, this is another indicator. You want to know what the colors are. Usually it's another rainbow runner. Indicator, when they go to pink and purple, it's usually a top. We get to white, we got to base out. Price has to base out before we can go back up. So there's a possibility we could hold right here and ultimately build a larger double bottom. That's the best case I see for Omi at the moment. Staying at this base here, around this 59, 58 area.
Do you think people should be concerned with how it's behaving against the rest of the market? While many alts have been running up, Omi has receded. Would that give you
Not at all.
cause
Omi
for
always,
concern?
Omi always acts differently. Doesn't usually run with the market. It usually runs the opposite. Bitcoin has to cool off. Omi's never run with the market, even in the
Is
past.
that because of the lack of exchanges, in your opinion?
Yeah, well, yes, 100%. But doesn't mean it doesn't make the rotation. And that's why it went up. See how I caught, you want to know how I caught Omi? I was like, I don't know, I was one of the first like 1,000 or 1,300 people to ever buy Omi. You know how I found it? I started seeing NFTs popping, NFT coins popping.
Yeah.
I started searching, what's the next coin that didn't pop yet? Because they go in rotation. It's the same money going from one coin to the next to the next.
Right.
No. Omi will fall in rotation on the next cycle. So.
Just a matter of money, people seeing that it hasn't run and rotating from what has run to it.
Yeah, good. They pump every coin. If it's in the top 500, it'll be good. I don't know the highs it'll get without an exchange. Like I said before, I want an exchange, but we don't currently have one.
So Pags, what's your thoughts on Omi now in terms of, you said you were looking to buy at 0007, but now you've switched gears there.
See that it's possible that it can hit 0003 or 4. It can go into 4s. And people say, "Well, what's the difference between you can get, 300 for a penny, or
it's 35% different,
3,000 for a penny versus 4,000 for a penny?" What in other words, what's the difference? Like, the difference of it going and losing the opportunity and it going the other direction is worse, right? So yeah, there's all different psychology on it. I think that my effort to invest in either another coin or holding, which you would say, why would you do that if it's inflationary and it's losing value every day? Gold and silver aren't losing, or they're not gaining value every day in accordance with the inflationary rate. So it's a mindset of, well, then I could just go into gold and silver if it's an inflationary hedge. No, I just believe that the markets in general, stock market, equity market, bond market, real estate market, probably there too. Mortgage. Listen, look. They're not. I was just at a holiday function. Every year I get invited. It's a title. The title company runs it, and everybody there is they're in title work, or their mortgage, their brokers, their mortgage brokers, their agents, real estate brokers. It's a great event. And you know what I everybody's talking about, what they're doing for holidays and what's going on. I'm speaking to mortgage brokers in different segments of Jersey. There's South Jersey, there's North Jersey, there's some from New York, some Staten Island, mostly though up north, and out of Manhattan, and a lot of them are in the Bergen and Hudson County arena. And I want to know, because they're the front runners of what's going to happen. You know what they're telling me? They haven't written any notes in weeks where there should at least be one in the queue. Zero. Now, I'm telling you, they should not all have that in common, because they're from different segments of the state. And that really is a huge red flag, because if they're not giving money to anyone, that's an immediate function of, if they're not giving money, the person that needs the money is not using it. That means they're not buying it. If they're not buying it, the seller's not selling it. So that means inventory's creeping up. Even though demand's still there for specific markets here and there, this is like the early stage. So it's all related. When there's a lot of liquidity in the market, there's those excess funds, and especially at the end of the year when people got to put it in because they're going to give it to Uncle Sam, and they got to get. We've done it already. I've done it many times. I've gotten. I was partners involved in transactions. I know how it works. You got to get that money out because you got to buy something, and it's run for the door. They haven't done that, and that means the liquidity's not there. And if the liquidity is not there, that excess money is not there. The excess money is the excess money that gets thrown into equity markets or into bonds or into crypto. Speculative markets, zero. It's cold. So these are those particular times where I have to say to myself, it was just a blessing in disguise that I didn't pull the trigger. And I speak to God's entry a few times weekly. And I always like to touch base because things can change on a blink of an eye. And he's a perfect person for that because he's in it every day, day to day, hour to hour, week to week. So things can change. But when you're hearing about the macro really turning away and going the opposite way, and another thing, Danny, I don't know about where you in Queens, but here in Jersey, in the late 80s and early 90s, mid 90s, especially in South Jersey, the strip mall boom started. It wasn't just plazas in the 80s. I'm talking about the strip mall booms. And that happened in the last 18 months. There has been more lease defaults on the commercial side compared to the last 35 years. And that's a stat. Go look it up.
How is that correlated maybe to the trend towards remote work and living?
Because the lease in the commercial markets is not only from the business standpoint, because those companies need offices, and office space has gone down, and the retail markets that, like, for instance, Willowbrook Mall in Wayne. I grew up in the late 70s, early 80s, into the 90s and mid 90s into the 2000s, couldn't get a parking spot. Now, 60% is open, and you know what they're doing? They're turning it into, they're trading the space inside, and they're turning it outside. So now you park and you come in, they're becoming like bars and breweries and Dave and Buster's and movie, a Cinemax.
My question would be, how much of that has to do also with e-commerce and remote work from home now in that trend?
It's a direct impact from that. But what I'm making a point is that the internet and commerce has been good for all through the 2000s, and there hasn't been a drop like the last 18 months that hasn't, nothing's changed on the internet in 18 months. Back
Yeah.
between 1998 and 2004, all you cared about watching on TV with Intel Pentium chips was the going from 500 meg to 1.2 gig. You cared about the Pentium chips growing at a fast rate. There was a huge impact on the changes that were happening. But in the last 20 years, internet hasn't changed. It's been the same. No speed has been better. The only thing that's been changing is the Wi-Fi speeds, maybe, to make things faster and the capability of our mobile devices. Other than that, Amazon's been.
Well, I would argue though, I mean, habits. So as people age out, like my mother would be the one to still go to stores and shopping malls and whatever. And as they age, people like her age out of markets, I could see more of a trend towards e-commerce, natural progression over.
I can tell you that.
Seen
Listen,
like decades. You know what I'm saying?
And listen, on the this is on the small markets, and these are small areas. And I'm just talking about Jersey and New York.
Yeah.
But I could go in Manhattan. You'll see a lot of the spaces have been
For sure.
They're not selling, but that's
Right.
irrelevant. That isn't what I'm saying. What I'm getting at is, if you look at the stat for the last 18 months, but it's a downward trend. It's a downward trend. It's not like 18 months. It's been going like this and like this. It's such a sharp drop off. And if you're not if those leases aren't getting signed, it's not getting signed, and the actual landlords are reducing their square foot money per square foot. They're actually getting it cheaper, and no one's signing. Macy's is going out. You already lost two of the largest, Bloomingdale's, Fortune offs. These guys are gone, and Sears gone. Like they were the early front runners. All of the smaller ones now, Nordstrom's taking a hit, and this is why when I say, like Powell, when they get on TV and they just don't say the word recession because they don't want to screw nobody, but once they say it, then it's like, oh, now we're official. No, we have been in a recession. I'm telling you, by definition, they just don't want to say it, and everybody's credit is going up. We're going into defaults, and the debt markets are going to. I'm telling you, they haven't given the mortgages to people who aren't been qualified, but the businesses of those people who have been that have been employed by making 120, 130,000, they're going to be out of a job. So there's going to be a default in the real estate market again, and those notes are going to get sold off again at pennies on the dollar, and we're going to see another bond market it's going to trickle again. I think it's just the timing is going to be when we're in that 6 to probably 12 months after the halving that's going to start to take effect. And like
watch the bonds, you got to watch unemployment. That's where we're at.
You're going to see those. Everybody's like, yeah, we're going to unemployment. Employment's great. Really, employment's great.
Once it starts to spike up, it's over. It just
Go ahead.
needs to go up. It doesn't have to go up a lot. It's already. This is a recession indicator for unemployment rate. It's already flashing red. It's been flashing red pretty much since April.
There's going to be more bankrupt. Danny, mark my words. There is going to be.
It goes up fast.
A bankruptcy run to claim bankruptcy. There's going to be more bankruptcy applications in the next. Mark my words, year to 3 years
with credit card.
History.
Yeah, credit card rates are soaring, and debt on cards are soaring. So I can see that.
It's going to happen. We're a year to 2 years away from the biggest, highest run of bankruptcy.
And that I think though is key. What you said, I think there might be a collapse coming, but it might be 2 or 3 years from now. I think that the next year or so might be fine.
It can't be.
I'm telling you, it's not, Dan.
Well,
The banks won't make it past March.
And I'm telling you, the reason why is because the big money doesn't wait until it's too late. And the big money moves the markets. And if you believe BlackRock CEO selling off what he sold off, did you see the names?
No, I didn't see that actually.
Look it up. In fact, anybody that's watching, Google BlackRock CEO sell off or list of sell off of equities that they sold off on the top of the biggest names in the market. I mean, it's not.
All right. Everybody's talking about the election. So what did they do the last one? They dumped it in the beginning of the year and they saved and gave everybody free money for the vote at the end of the year.
Right.
So it kind of lines up with March again. I think everything's, to me, if it doesn't crash now in the next, few weeks, like I said, we could go to the end of February and March, and then it really starts. Something's going to happen.
Yeah, I guess we'll see.
I'm telling you what I believe, Dan.
Yeah, of
I
course.
believe-
No, of course. And I think it's important, like I said, to anticipate all outcomes. My perspective is I'm not going to try to time that. And I just know what my long-term plan is in terms of crypto and what I want to hold into next cycle. And I'm going to let that cycle play
You're
out.
going to listen. You're going to lose 60 to 90% of whatever you put in
Stop funning my bags, Pags.
before you start to 100.
I already did that, man. I'm back now.
All right, listen, I got a new trick for you guys. Everybody should be looking to do. We'll take a little different direction.
Oh,
We got altcoins, right? And everything went up right now recently in the past month. What you should be doing is looking at all those altcoins compared to BTC and find the ones that did the best against BTC. And those will be the ones that do the best in a real bull run.
Just like Solana,
Algorand.
Caspa.
Sol, Link.
Yeah.
there's a
Although
couple.
Link did very well in a bear market and then didn't.
Yeah, it does. But I'm
Yeah.
just saying this is one thing you should
Yeah.
look at.
I do agree with you that when look for strength now to predict
Right.
strength later, because this is where the money's going to
Correct.
flow to first. I agree.
Yeah, that's the underlying point. Like, look now what's popping, and it might be a leading narrative for the next run. So, or it's AI, gaming coins, whatever you're into. But you always compare it to
Keep
BTC.
an eye on XLM too.
I'm not familiar with XLM.
XRP coin. XRP Army coin.
Oh,
Bro, it's basically
Peg,
the same
you
thing.
still love XRP Pegs?
I'm super bullish on it. I'm not coming in yet
Yeah.
because what I
Hold
believe
on.
the markets are going to do, it's going to take down a lot more than I'm going to gain. And like I said, I don't want to lose 60%, 40%, or 70% before I make 300% or 500%.
So you're waiting for confirmation.
I don't need it to come up before it goes down. Like I don't need it to start to come up after it's done doing its dip. I just need to know that, the electricity is still going to be on and I can still go to the supermarket without taking my gun with me. And I know it's yeah, that's impossible. Anybody thought that we'd be mandated? We have to wear masks and shit.
This is
You strike me as someone who keeps gold bars in a safe with a stack of cash and a gun.
Here, let me show you a couple charts to put things in perspective. What could possibly happen? I'm not trying to scare everybody. I'm just trying to show you, possibilities. So back in 2008, this is Nintendo we're looking at. It took 12 years to come back to its all-time high. That's a good company, right? So anything can happen with any asset. Is what I'm trying to say. Let's look at one more. I think we got Sony. This is a crazy one to say. Sony's a good company. It still hasn't broken its all-time high from the dot-com bubble.
Yeah.
So, I mean, those are things people got to realize. That's how long you'll be holding in a bad situation. I don't, just trying to avoid people doing. I'm not saying it's going to happen, but until you get some confirmation that we get over this hump with the yield curve uninverting and weathering that storm, we are going to get a correction. It's 100% possible. The data is 100% in the past. It doesn't change. So that's why I showed you the inverted yield curve.
Danny, I just don't feel, and I've been through, obviously, I'm 50 now.
Of course.
I don't feel on the streets, like I'm in the person market. I've been like I have said before, I've been in the food industry for over 20 years before real estate. The circles I've been in, you could just imagine, and everywhere from New York, New Jersey, political. I don't feel market sentiment in the circles I'm in, people I talk to. I don't feel the bulls. In fact, I feel so much more speculation and so much more detailed bears than I've ever felt there's people talking to me about and asking me, yeah, I'm looking to pull out. I'm like, they're looking to pay the penalty and pull out of their 401k after 30 years, 28
It would
years.
really be a shame for all the baby boomers, all the money they saved, to get wiped out in like a 2008 or .com type of deal. What's going to happen then?
Yeah.
I'm
You know?
telling you, I just know
Well, that's how they bring you into CBDC. They got to
when COVID just obviously wasn't like in full fledged, but when it just started coming through early 2000, I'm still in the real estate market. I'm like, damn, and then, we got to do like, you got to go we got to walk around. It really wasn't like mask mandates, but it was still kind of like be serious about the possibility. So maybe you might wear one. Little warning, nothing crazy. Everything's cool, going through, meeting people, starting to. But I'm looking at the crypto market. I'm like, should I get in? Is this apocalypse time? But I'm hearing people like, spending money. Who's buying houses? Doesn't matter. Real estate's still doing good. Interest rates were like low, and they're coming to come on lower. And I'm like, wow, this is cool. Maybe this is a good time. I felt it. I felt the energy, and that's why I went in. And it just, and I held on, and it was a good year and a half. And then, me and God's entry got more familiar with each other and on the trusting side, and got to because he's very closed off. I'm not going to speak for you, Jay, but he's very particular on who he speaks with and talks to, outside and inside online. And it was a slow grind getting to know him and getting to build trust. And now it's a great relationship, but because of his resource and what he knows, it shines a light onto the possibilities. You still have to make the determination for yourself, whether you're a trader or an investor or both. You still got to make that determination of where
They're all different mindsets. That's all different mindsets.
Me and you, Danny, might have different mindsets, but we can still relate to what he has to share, and we'll both be right. If what he says is true.
So then what do you think, Pags, about the halving cycle, and do you think the halving will do what it's done historically?
No, I think this one changes because the market outside of what's going on is different. If the market outside the market hasn't changed in the two Bitcoin cycles. Real estate market's the only thing that's gone up, and the difference is everything else has been the same. The difference is we had a different president. Other than that, everything's been the same. Now it's just like the inflation rate went up to skyrocket. There's a lot more defaults. There's a lot more problems in the real estate and mortgage markets that are coming to a slow. And there's the liquidity issues we have now. None of that has happened. We always had liquidity there. Liquidity was growing. And you would think it would be different now because we have more back then we didn't have as many exchanges. We couldn't transact this stuff. So the volume was paltry. We couldn't really get those buys in. People didn't have the resources, the app, download the app, you didn't. Now you got Coinbase on every corner. You got a Robinhood. There's a lot more ways to get it now. And it's easier and it's quicker. It's faster in and out of your bank and out and in. And banks are a part of it now. And there's a lot of stuff happening. BlackRock's coming in the game. So you think there's, you'd have more of that liquidity and you'd have more volume. We don't have it. It doesn't make sense. So this Bitcoin cycle, I don't believe it bucks the same trend. 18 months later.
I think it really happens. See what happens in regular markets, in traditional markets. If we actually decide to dump off, the best thing would happen is we dump off in March, just like we did last time. And that would be right around lining up with the halving. So we need the markets to dump, them to basically print money. I mean, that's what we're in. You're gonna have to print money and they'll put the market back up. Some sort of stimulus somewhere.
But they're not selling money now because it's expensive. The dollar's not cheap anymore, so it's hard to do that, Jay. You can't get the best of both worlds. You can't say, oh yeah, they're not going to write loans because it's going to be too expensive. So the volume there is going to be dried up. Now, what do you think? We're going to go down to 3% again? No way. It's not going to happen. It's really a fucked up situation. Honestly, that's why I'm totally sidelining it at this point, Danny, because I'm very I'm unsure and I don't feel confident. and the people around me and the resources I know. And I like to listen to people who I don't talk to who are billionaires, and they're not feeling good. They're not buying and they're selling. And those are the guys that run the show. So I'm bucking that trend, to be honest with you. I really can.
You can find ways to short the market without actually doing leverage trading. Like there's other ways to short it. You can.
I'm considering that, Danny, to be honest with you. I just spoke to God's Entry last week about it. I'm considering it
I
strongly.
believe this is TLT, and it pays dividends. So when these rate, the 2-year and the 10-year come down, this is going to go up like a rocket. But this isn't like Bitcoin. This will take months to a year and a half to really get to where it's going to go. But it's been selling off the whole time. Pays dividends.
I don't know how this.
There's other options out there than longing everything.
Following the political game, like in at least over there in the East, I think that looking at like just Iran has made some threatening things, and there's been some stuff happening in Lebanon and other countries around there, and some allies with Israel. And so why I want to make this a point is because the possibility of some kind of a bigger country, at least with respect to nuclear capabilities and stuff, showing up, and how that affects things, in addition to uncertainty with the current wars that are in place and how other players can affect each other and how that happens, can have a huge impact on the global market, which will affect us, right? And it'll affect our retail, it'll affect shipping, it'll affect all the ports, it'll affect a lot of stuff. I mean, to the point where we could get rationed again on certain items or significant items. So that's important, right? But if we have some event that causes this particular election, which could happen under the Constitution, to be halted, there won't be an election come next November, and it could get pushed back under certain circumstances. You could look that up. And I don't know to the extent of with the word war, or how we would consider being at war, or how we get thrown into that, where the Constitution would gauge that right to the election to be postponed. But there's a possibility that could happen. And then market sentiment and people and civil uncertainty start to kick in a little bit more. And it becomes a little scary. It becomes like, looting across the states. If people are getting away with robbing and other people know that robbing is okay, and then they could call martial law. They can call, the National Guard in over here. And it, in the late 60s in Newark, New Jersey, there was just because of Martin Luther King and things that had taken place back then, him getting shot. There was looting in the city of Newark. They had National Guard coming down, the tanks right down the main avenues, county roads with tanks because of the looting. And there was nobody with guns and shotguns and things that a lot more people have guns. There was none of that on the street. They were able to contain it. Now, forget it.
I feel like we just got close to that with COVID.
No, I'm just making a point that if it starts to, it can.
There are always worst case scenarios, right? That could play out.
But this isn't really worst case. Worst case is
that's pretty bad.
Like an EMP bomb shelter. I'm talking about
worst case.
I'm talking about
watch it, Pags. You can't handle the truth.
No, I'm talking about sectional and very limited areas of civil unrest starting to gain traction to where people start. In other words, if supermarkets start to get looted and that becomes a thing, civil people start saying, fuck, if they're going to loot the supermarket, I'm not going to have a place to go shopping. So what am I going to do? They're going to get out there and go to the supermarket. And if they don't try to buy something, take it for free until they got what they got to get through emergency. And that might cause a cascading event throughout the country because food is food. So what happens? People start getting shot. Crazy things happen, bro. And I don't want that to happen. But what I'm saying is, when fear kicks in, it changes the dynamic of society. And we had a taste of it. We had a taste of it. We did it with ethically, without civil unrest. People stood on lines. We didn't go get gas. Even numbers on your license plate went on Mondays with Sandy here in Jersey. People got gas on certain day. They did it. They were just civil about it because it was temporary. But if you get to the point where supermarkets or pharmacies, Walgreens, they don't CVS's and stuff get looted, there's not going to be a new truck coming in to fill it up from the port. They're just not going to come. So what happens? Where do you go? What happens? They go to another one, a farther, and then traffic becomes an issue. This is just the logistics of problems that have nothing to do with the markets. It's just on this level. Forget about the stock markets and shit. They would freeze it. Listen to what I'm telling you, because I believe that that's going to happen. I don't believe there's going to be, I really don't. I really want the election to happen. I really want it to go smooth. I don't care who gets president, because I don't believe none of it matters. But to me, obviously, I would rather have who's currently there not there, regardless of who comes in. I'd rather just a different sediment. But I just feel that this is we're in times of uncertainty more than ever, and our national debt rate just keeps going higher and higher.
Yeah, 30 trillion.
It's getting higher and faster.
They're definitely not good money managers. The economy is definitely not their strong suit.
Listen, I have my stockade, brother, and I am ready. It's scary, but I'm prepared.
What is this Caspa coin?
Caspa is that's a good one. It's been running hard.
I noticed that. I got it on my list.
I think it just crossed $1 billion market cap.
I definitely don't buy it here.
No, look at that. Look at that.
That's
Come on, guys.
nuts.
Think we're in a bear market? Look at that parabolic line.
Yeah, God's Entry's looking at it like, I'm going to short the shit out of this.
Yeah, where's the divergence at?
You two bears.
Listen, when I turn bullish, y'all better get scared.
I'm out the market.
Why? I've been right the whole time. For the most part.
Yeah.
And I will get it wrong eventually. It's just
everyone does.
Probability. I'm not perfect. Just trying to share my experience so everybody understands that, because we're going up a little bit right now, doesn't mean it's full-fledged bull market. Sometimes markets react like this towards the end. They're like little cycles, like a rotation, where all the money runs into the alts because there's nowhere else to go because Bitcoin went up, Ethereum went up. Now they take their gains and they run it through the other coins. It's just a cycle.
Yeah, people chase. Yeah. Well, we've been on for about 2 hours, guys. I think this is a good spot to I want to thank both of you guys for coming on. It was a great conversation covering a wide range of things, and I love your perspective as always.
Appreciate you having me on.
Thank you again, Dan. I appreciate having me. I missed the last time, and there'll be more.
Yeah, we'll do it again because Pags, I want to definitely talk to you more about Veve and stuff and your journey there. This was mostly focused on overall market stuff. So
absolutely.
And Gods will get back on another, wait a little while, bring up some charts in a few weeks or so. It's always good to catch up with you. And everyone,
thank you very much.
Yeah, and everyone in the chat, thanks for coming through. Make sure you smash the like on the way out. I will see you guys in the next one.
Take care, buddy. Thanks.